Trading isn't easy, but learning the correct way to trade is very important. This is why I put together 3 simple but important concepts every beginner should know. Today I'm going to teach you exactly how candlesticks operate, exactly what highs and lows are, and exactly how to identify market structure so you know whether price is going up or down. Click the link in the description below to get access to my free ultimate trading guide, which has all of these concepts and more. Now back to the video. First thing that you really need to understand is the anatomy of a candlestick. Each specific interval is represented by a candlestick. You need to know how these candlesticks move. So each candlestick moves like this. Something we call OHLC, which is open, high, low, close. So each candlestick has an open, a high, a low, and a closing point. Let's say our time interval starts right here. We're going to show what this candlestick would look like. Price opens here, it goes down, so now that's currently the lowest point that price was at in that candlestick. Price goes up, and then price goes down, and that's where it closes, right? This would be the open, this would be the close. The points where the price was leaves these skinny lines, which we call wicks, right? These wicks basically represent where price was, and the bulk of the candle, the shaded portion, is the body. So this is the body, these skinny portions are the wicks. Where is the open? Open of the candlestick is right here. Where's the lowest point of the candlestick? The lowest point is the bottom of this wick, because that's where price was. The highest point is up here, because that's where the highest point that the candlestick made, and that's also where price was. And where is the closing point? The closing point of the candle is right here. And now we're going to go to this red candle. Now you might be looking at this and be like, why does this look different than this? Because there's a lot of variation with candlesticks. They do not all look the same at all. There's just a lot of variation. However, they all function the same: open, high, low, close. So let's say the candle opens here, it goes up. So now this is currently the highest point that this candle has been. Then the candle goes down, all the way down here. This is now the lowest point that this candle has been. And then the candle comes back, and this is where it closes. This is where that specific time interval for this candlestick ended. Where price was, it leaves a wick, and same for down here. Where's the high, open, high, low, close for this candle? If you're going up, the open of the candle is down here. If you're going down, the open of the candle will be here. So that being said, this is the open. This up here is the high. This down here is the lowest point that this candlestick was. And this here is the close. So this is the anatomy of a candlestick. Open, high, low, close. They function practically the same, except the open for each candle is just the inverse, essentially. And remember, the bulk of the candle, the shaded portion, essentially is the body. The skinny portions are the wicks. So the next thing that you need to understand are highs and lows. So I have this simple diagram here. Essentially, what is a high? A high is a point. The easiest way to explain it is when price goes up and then pivots down. When it goes up and pivots down, it leaves a high. So this would now be a high. So now you know what a high is, when price goes up and pivots down. So what's a low? Well, a low is when price goes down and pivots up. The V shape that it leaves at the bottom is a low. Then obviously same thing. Price goes up, pivots down. This point that it leaves is a high. Price goes down, pivots up, the V-shaped pivot it leaves is a low. Now, this gets a little bit more complicated because do you notice something about this right here? So you see this high? You see how this high is higher than this high? So not only is this a high, this is also a higher high. And that's pretty self-explanatory. It's higher than that high. Now, vice versa, if you look at this low and this low, do you know that this low is obviously higher than this low? So that would now be a higher low. This is going up. Now we're going to go on the side that is going down. So remember, we come down, pivot up. What does it leave? It leaves a low. We go up, we pivot down, we have a high, right? What do we also see now? We go down, we pivot up, we have a low, we go up, and we pivot down, so we have another high. Obviously we have a low here, we have a high here, then we have another low here. However, do you notice something different? This low is lower than this low, right? Instead of like this low being higher than the previous low, this low is lower than this low, so that is a lower low. You know how this is a high? Well, this high is lower than this high, so this is a lower high. So this is going to kind of go hand in hand with the next part that I'm going to teach about. So now we're going to talk about market structure. So market structure shows us essentially if price is bullish, which just means going up, or bearish, which just means going down. Alright? Remember, price is going up, it comes down, so that leaves a high. Price goes down, goes up, that leaves a low. Goes up, pivots down, leaves a high. Price goes down, pivots up, leaves a low. So we notice something here again, right? Is this the last example? So we have a high, we have a low, we have another high, but this high is higher than the previous high, so that's a higher high. We have another low, but this is higher than the previous low, so this is a higher low. Now you're probably wondering, like, well, this is the same thing you just showed me. Well, now I'm showing you what this means. So market structure shows us if price is bullish or bearish. How we identify market structure is by identifying the highs and lows. So this pattern right here is called bullish market structure. Remember, bullish just means going up. So if bullish means going up, what does this pattern right here tell us? That we're probably going up, right? So this is called bullish market structure, which shows us that we're potentially going higher. Now, if we draw a line from this high to the right, to the point of where we create a new high, this is how we identify what we like to call a market structure shift, or you can call it MSS for short, just abbreviating it because it's easier. So this is just a way to identify that market structure is currently bullish, that market structure is currently showing that it wants to go up. That's all that means. Now on the other end, we go down, we go up, we leave a low, we go up, we go down, we leave a high, we go down, we go up, we leave a low, we go up, and we go down, and we leave a high. So again, it's the same thing, it's just inverse. We have a low, we have a high, We have a lower low because this low is lower than this previous one. And we have a lower high because this high is lower than the previous high. So now, same pattern as you saw before, but now I'm teaching you what this means. This is called bearish market structure. Remember, bearish just means going down. So this is a sign that we're going down. Whereas a higher high is a sign that we're going up. On the inverse side, a lower low is a sign that we're going down. What's the easy way for us to identify this? We draw a line, again to the right, and we can identify it as a market structure shift, or MSS for short. So that's just a way to identify it. So remember, this is bullish market structure. This is bearish market structure. This means we're potentially going up. This means we're potentially going down.